Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to the One Bitcoin Show. Today is January the 17th, 2019. Strong hand, long-term thinking, unconfiscatable. Bitcoin is the next Bitcoin. One Bitcoin equals one Bitcoin. All right, check out the links below. Everything I talk about on this video will be linked to below. Tomorrow, 1 p.m. London time, This Week in Bitcoin. Have a strong hand. It's almost here. Jeet will be on, Farzam from South Africa, and Gabriel from Venezuela. That's 1 p.m. London time, 8 a.m. in New York, 7 a.m. in Chicago. And I think that's where Jeet is coming from. I hope he's up. All right. So that's tomorrow morning. So that's pretty soon for some of you people out there. But hey, you don't need to watch it live. This is all taped. You'll be able to watch this in the future, whenever. Maybe you're watching this in the future. Maybe you're watching this in 2021 and you're laughing your butt off at all the weak hands out there that were around in 2019. Because this is your daily dose of strong hand, baby. Techbalt, follow me there on Twitter, TECHBALT. I want to thank Venshin. He sent me $5 over Bitbacker. On Bitbacker, I'm Bitcoin Meister. It's a crypto Patreon type solution. Check them out. They're improving things over there. Venshin reminded me of that, and I thank Venshin for the support. He supported me a lot of different ways, but it's good. Everyone, check out Bitbacker if you want to support crypto people through some Patreon-like device that doesn't involve Patreon and doesn't involve fiat. All right, things are advancing slowly but surely. It's this the content creator landscape, funding of content creators, YouTube. The landscape is changing, and who knows what it will look like in a year. It's exciting stuff to me. So Matt Odell has a tweet, and it says, the recent Ethereum Constantinople debacle is the perfect example of why hard forks should be avoided unless absolutely necessary. They are an attack vector and weaken the security model of these systems. So yeah, Ethereum's trying to get this hard fork done. They almost went through with it, and it would have been a disaster. They found the problem. So yeah, clearly it's a weakness. It weakens the security model. And it reminds us all of back in 2017 when we were telling the Bcash people, don't rush it. You don't need a fork is a last ditch thing, a hard fork for Bitcoin. We're going to try to do this SegWit thing. It's a soft fork, but they were screaming, we got to do a hard. So they hard forked away. They formed their own coin. Had Bitcoin hard forked, it would have been disastrous. Then the old chain could have survived, and it would have been terrible. And again, there's a certain impulsivity behind the people who we need this now. We need this hard fork now. And when we didn't need the hard fork now back then. So yeah, hard forks are last. It's only if there's some technical horrible thing that's went wrong, and you know that everyone is going to hard fork, and you know that the hard fork is set up perfectly to work afterwards. Now remember when SegWit 2x, when those people were going to hard fork from Bitcoin to form their own crypto dividend of Bitcoin, and how it was totally, if everyone in Bitcoin would have said, oh yeah, 2x, we're going with their new rules, their new way of doing things, it would have been a disaster because it was totally technically unsound, and it blew up right away before there even was a 2x coin. But hardly anyone remembers 2017. And speaking of that, I didn't link to this, but I linked to Matt's tweet below. But I'm gonna go back to the discussing hard forks, and back to the summer of 2017. Oh, right. The fees are too high. The fees are too high. We need Bcash. We need to do Bcash now. Well, lo and behold, here we are in the present. Now, SegWit is about at 40%. Bitcoin addresses, it's about 40%. Okay. There's an article on CoinDesk. The title is kind of like a FUD article. It's like a FUD type of title. But the point is in the article, it does say there's plenty of people that aren't switching to SegWit because they don't mind the fees. The fees aren't even high now. The fees aren't high. So there was no need to rush into a hard fork back then. There wasn't a need at all because now there are people like, whatever. I don't even need to use SegWit. It's not, I don't need to save money. And they said there's huge, there's large companies out there. They don't give a darn about, paying a little bit extra. Because right now, to be honest, it's, sending Bitcoin to a non-SegWit address. It's very cheap. It was all FUD. There was a time it was expensive, but there's a back and forth to this whole thing. Sometimes the fees are high. Sometimes there's a lot of people using Bitcoin. There's not a lot of people sending Bitcoin now. So the fees are low. But again, the SegWit option is there. It was a soft fork. It's there. And Bitcoin did not have the hard fork. That is the bottom line. It did not hard fork. Bcash was formed, and the numbers speak for themselves. What's Bcash doing? Did they really need Bcash? Did they really? Look, it split itself. Anyway, read Matt Odell's tweet. So pound that like button also. Nick Szabo. Financial institutions make people feel safe by hiding risk behind layers of complexity. Crypto brings risk front and center and brags about it on the internet. Okay, I would say Bitcoin brings risk front and center and brags about it on the internet. This is such a great point because people say, "Oh, I feel so comfortable with my bank. Oh, it's that's the way I've always done things. I love my IRA. I love my stock market. I love traditional financial institutions. I feel so safe." Well, you feel safe is because they hide the risk. These things, there's a lot of complexity behind it. They control your money. They could go out of business. Sure, they're insured. Maybe they're insured, sort of insured. I don't know, insured. Maybe they'll be bailed out. Maybe. Okay, there is risk. Fractional reserve. They're doing fractional reserve trading. That's risk. But there's complex. They have a nice marketing program, and look, the bank looks nice from the front end. Everything looks nice and clean and safe. They talk a lot of complicated game and have a lot of complicated charts, and it hides that risk. They go out of their way to hide their risk. On the other hand, because you're giving your personal, they're responsible for your money. They take responsibility. You've given your value to a third party. With Bitcoin, the risk is straight up. It says it right away. If you lose this private key, you're out of luck, baby. You lost it all. That's a risk. If you send your Bitcoin to an exchange, it could totally steal all your money. Steal all your Bitcoin. The risks are out there. It all boils down to personal responsibility. Those who clearly understand what personal responsibility is, they understand what risk is, and they can handle the risk. They can handle the Bitcoin risk. The people dealing with banks, they can't handle that risk. They really can't handle that risk, but they don't understand that it's even going on. They do not even know what is going on behind the scenes of banks. So they're willfully ignorant and not willfully, blissfully ignorant. Excuse me. They are blissfully, and they're willful. They're blissfully ignorant of what's really going on. With Bitcoin, there's no ignorance. There's no ignorance here. If you understand that concept of controlling your own private key and personal responsibility, then you know the risk. You totally understand the risk, and you're totally in control of the risk. With the banks, you have no control over the risk whatsoever. I thought it was a great tweet by Nick Szabo. It really sums up the difference between how Bitcoin approaches risk and how these financial institutions approach risk. Risk, we thrive on risk here in Bitcoin because, again, we understand it, we control it. We have it under our control. We know if we send it to an exchange, there goes, we don't control our private key anymore. But when these people that have their money in the banks, they don't know what a bail-in is. They don't know that it could happen, or their bank could say, we don't want to do business with you anymore. That's it. Here's a check for 90% of your money. We had to take fees out, of course. All right. So again, check me out on Twitter at TechBalt, TECHBALT. Go to TECHBALT.com to see all the old This Week in Bitcoin shows. DisruptMeister.com. You watch all of my Bitcoin related shows I've ever been on in my life. I think it's almost 1,200 of them now. Every day, a new video right here on the Bitcoin Meister channel. So here's a little fact check. Ripple fact check. Evidence that Ripple does not, in fact, have any relationship with any of the money transmission companies they claim to. Made this video fact checking Ripple's claims. Okay, was hoping you could help me get it noticed. So, okay, I retweeted this dude. You can watch it yourself. I don't care that much. I mean, I understand what Ripple is, but maybe some of you don't really get what it is, and this might open your eyes. Why anyone would want to deal with a crypto that is intertwined with these financial institutions is beyond my comprehension. Again, it's the people that think that there's no risk with the banks. There you go. Those are the people they're dealing with the Ripple. They like the pretty bank picture. Oh, these banks, they control everything. Let's just get in bed with them, and won't be risky at all to have this centralized cryptocurrency. Nothing wrong. Yeah, sure. Bitcoin's too. There's no bailouts in Bitcoin. I don't want to deal with that. All right, yeah, check out that Ripple dude. But whatever, go your own way. I don't care if you get Ripple or not. I'm sticking with my Bitcoin. It's personal responsibility is new counterculture. In the long term, in the long run, you shall see. Speaking of long-term thinking here, Jeet, who again, he'll be on the show tomorrow, if all goes well. He's got a tweet out here, and I don't know if he was even referring to Bitcoin, but I turned this into a Bitcoin-related tweet. He says, what is this? We have a protocol for the internet that's like 30 years old and will exist forever. Presenting and storing information using this as the base layer is good. Apps will depreciate. Rest in peace, Google Reader. And operating systems will die. Rest in peace, Palm. Rest in peace, BlackBerry. Internet won't. So yeah, you can fill in Bitcoin where he was saying internet. Bitcoin hasn't been around for 30 years. The Bitcoin protocol hasn't been around for 30 years, but it's sticking around. Now, things that might be built on top of Bitcoin, they might not be around. There will be things built on top of Bitcoin that will fail, that will be popular for a while, and then they'll disappear. There'll be coins forked away from Bitcoin that'll be around for a while, but they will also disappear. But that base, it's not going anywhere. It's simple. It's good for the store of value. It's, keep it simple. Don't complicate matters. No attack vectors. There you go. In 30 years, we'll be saying that, or 20 years, we'll be saying the same thing about the Bitcoin as we say about the internet today. Thank you, Jeet, for that wonderful tweet. And Jeet is a dude who is in motion on Twitter. You got to follow him. Again, he's linked to below. Okay. Yeah, I'll be at the Tel Aviv Bitcoin Embassy, 8 p.m. on Sunday. I'm usually there in Tel Aviv until March the 13th, it appears. Andreas Antonopoulos has a new video out. I just watched it. I recommend it for everyone. He talks about the sanctions and censorship resistance. The two Bitcoin addresses that were sanctioned by the United States that were Iranian related. And he really, he shows how silly it is to just sanction two addresses. And eventually more addresses will be sanctioned, but it's so easy just to create new addresses. So is the government really doing this because they're trying to stop terrorism? Or are they doing it because they want more power? And he concludes it's just the government. It's a power grab. It's going to fail. It's going to freak out some exchanges. It might hurt some exchanges. You watch the entire video, but no, Bitcoin cannot be sanctioned in total, in whole. It's very easy just to, if you were the owner of those 2 Bitcoin addresses, just to get a new Bitcoin address. And I've said that before, but he puts it in to nicer words. Some of the dudes, some of the, the crypto dividend, the airdrop, Brhodium, some of the dudes reached out to me and said it's on the Turkish exchange now. And this Turkish exchange, I think it's Syscoin or something. I don't even know what it's actually like a top 30 or top 40 exchange. I can't see what the Brhodium is worth on there, because you have to like be signed up to. I'm not signing up for a Turkish exchange. Just they do KYC there too. I mean, I'm going to send my Maryland driver's license to an exchange in Turkey. Yeah. Pound that like button. Good luck with that. But but the point is this: that gets them closer to being listed on a coin market cap, which is obviously important if you're an altcoin, if you're a crypto dividend. And again, I mentioned this because we got this. If you guys signed up for it a year ago, the airdrop. I think there'll be more airdrops in the future from other crypto dividends of Bitcoin. I hope so. It's a lot of fun getting airdrop free coins that now, again, and I said this before, on BISC, you can see the price. And on BISC, basically, I think it's like 170 Brhodium or equal to 1 Bitcoin. So back in the day, if you had 17 Bitcoin and you signed up for the Brhodium airdrop and you got your 170 Brhodium, well, now you'd have 18 Bitcoin. You would turn your 170 Brhodium. I mean, there you go. That's what you get for holding your Bitcoin. That's what you get for holding your Bitcoin. You get these. You never know how these things are going to turn out. And obviously, the airdrop ones, they're a lot easier. Well, on one level, they're a lot not as much risk. There's not when you're getting B Diamond. I've never claimed my B Diamond because there's no safe way of doing it. You got to use your private key. You got to deal with your private key. I don't want to touch my freaking private key. With the airdrops, you don't have to touch your private key. Bottom line, and that's a very nice thing for the airdrop crypto dividends. So bring on more airdrop crypto dividends. All you people who want to do altcoins or whatever, give it to the Bitcoin holders for free. Airdrop them to the Bitcoin holders, and we'll see. You'll see how it goes, and we'll just be rewarded for holding. All right, everybody, bang that bell button. Again, tune in tomorrow at 8 a.m. Eastern Time, 1 p.m. London time for the This Week in Bitcoin show. It's going to be a lot of fun. Pound that like button. Click on those squares. If you're watching this taped, you can see all my old videos at disruptmeister.com. I'm Adam Meister, Bitcoin Meister, Disrupt Meister. Remember to subscribe to the channel. I will see you guys in the chat right now and see you tomorrow morning on This Week in Bitcoin. Bye-bye.